Hello and welcome to Pro Trader Strategies Market Commentary for Monday, August the 13th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't even know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on with some economic data. And because it's a Monday, we don't get a whole lot of data today. And let's move on to the overall markets then. We've got crude oil coming off just a little bit today by about $1.66. Remember, when we get up into that 70s, I talked about this. You know, as good as the economy is doing right now, I don't think it can sustain $70+ a barrel oil. That being said, I do think it's going to stay right here in and around this mid-60s. It just happens to be right smashed in between the 61 Fibonacci and the 38 Fibonacci extensions, and right there pinned, which lands right in between those, is the point of control, which is the magnet. So we could easily see how these resistance and support levels would come into effect, keeping this kind of contained. And then right there in the middle, we have the point of control, which is the magnet. That would mean that it is going to be a pretty tough row to hoe to get out of this little area here. That being said, any kind of major economic news could do that. But as of right now, with not a lot of volume and a whole lot of conviction, it's going to be difficult to get out of this little range-bound area. Gold falling out of bed today, but holding that $1,200 psychological level that I've been talking so much about. I said that the bulls are probably trying to defend that till the cows come home. Today, with a spike in the dollar, again, strengthen the dollar, it leads to weakness in gold, which would make sense. Weakness in basically any dollar-denominated commodity should have downward weakness when the strength in the dollar goes up. Especially with no other levers and pulleys coming into effect like supply and demand, things of that nature. So we could, it's understandable to see a big sell-off in gold. But again, I would think that the bulls, no matter what, are going to try and defend that area. They don't want to see that slip. Bitcoin coming off a little bit today by about $100. You know, big thing right now is it going to test 5,000 or is it going to test 7,000 first? My theory would be that it's going to melt up over time. I don't think that it's going to get much lower than this. There's a lot of things that are going on here. If it's out at these levels, it makes it very difficult for the miners to produce more coins because of the cost of energy and all the other ancillary things that goes into mining. That being said, if you stop mining, that lowers the supply theoretically, and then if there's less supply, that should create more demand. That would be the thinking behind a bull move there, other than just the strength of the demand driving that market. Then the bonds did move higher. You know, all of this stuff with European region, including Turkey and things of that nature, which is the newest rise. That's giving bonds a move higher as there is a flight to safety out of either foreign bonds and treasuries into the United States because it is fully backed, and the interest rates are probably a lot more interesting in the fact that you don't have a whole lot of risk. All right, so bonds have given up a little bit today with that kind of being behind us and having the weekend to kind of chew over that. All right, we've got the VIX back into the teens today, albeit they were a little bit higher today, and market tried to rally, has since started rolling over. We're starting to see the VIX start to move higher as well. So let's get on with the overall equities right here. Dow Jones Industrial Average down almost 90 points, near the lows of the day. This is what I was talking about when it started rallying. That was driving down the VIX as the market moved higher. But This is more of like a little bit of a dead cat bounce is what it's kind of feeling like. We got the bounce off of the open, maybe trying to flush out some of the shorts of the overnight inventory, and then if resumed to the downside. Now, any type of doji like this down in the lower half is going to look like one of those two where we get the counter approaching dojis, where maybe Friday it was looking like a bottom if we got confirmation to the top. Now it's going to almost look like any move, even up and testing the 9-day moving average at this area, it's going to look like a very bearish kind of setup in my eyes. So keep that in mind. Now that we've kind of gone down there and tested Friday's lows, it just doesn't look very good to me. And then on to the mini S&Ps. Actually, let's talk about the Dow Jones. Let's talk about the other stock, the NASDAQ. Has gone up, tested the 61 Fibonacci level this morning, rallied above that, but again, just looks like it wants to roll over here, and most likely come down and test the the value area high here, where the 50 Fibonacci extension lines up with the 3-day high or 3-year high. At least when I set this up, that was a good area of a top because we had a nice big correction there. I'm going to leave that there for at least a little while. And then did my extensions based on that, so they should line up pretty closely. That being said, they have rolled over. Would expect it to at least want to come down and test the value area high there. And then finally, the mini S&Ps, probably having the best of all of them, only down about 7 and in percentage terms. But this is what I was talking about. Overnight inventory got pretty short coming into the day session, flushed them out, and then have resumed to the downside. So it was looking like it was just kind of a flush to get some of that short inventory out of the way. All right, on to a couple of things that I've done with Netflix. I'm doing this earnings setup. All right, so we're coming out of the earnings season. There's still a lot of earnings to come out, don't get me wrong, but this is a great time to start setting up for next earnings season by doing some of these calendar spreads and some of the diagonals. I show you how to do those in the webinar, and I set this one up as a calendar, did the same strikes out across the board, so it is a horizontal spread, and I did it in the SEP-OC spread, did the 360 calls, so I sold the September, bought the October to get long for that earnings, and the expansion of volatility is what we're looking for there. And I paid a debit of $8.30 in both my margin and in my IRA. My IRA, I actually got it a little bit cheaper. I think I paid $8.28 for that one. But I'm trying to set up for expansion and volatility. That's one of the ways we can kind of play this, is I'm buying volatility in a sense in that month that has earnings, and then I'm selling some shorter duration to help finance that. I show you how to do all of that in the webinars for earnings setup, so check that out at protraderstrategies.com. Also, finally, we also have an earnings that I'm going to be looking at, and that is Home Depot, playing Home Depot most likely to the upside. I think that these big box stores for home improvement have done very well. I've gone there quite a bit and see a lot of people in there, especially if we're starting to see new and existing home sales going up, especially the existing home sales. People are going to be going to Home Depot, fixing little things like that. So I think that that will also give a boost to the upside. So probably playing Home Depot to the upside today. And that's about it. Other than if you can't take that, take it easy.